Hey guys, John from Gutenberg Research here. In this video, I'm going to take you through the changes I made to our Alibaba earnings model. If you haven't downloaded the results, they're available at the Alibaba Investor Relations homepage. And if you'd like to download our Alibaba earnings model, it's available from our Models tab. If you click on Alibaba, scroll down and click this icon to download. So this quarter was relatively straightforward. There's not too many surprises here. If you'd like to get a better understanding of how this model works, definitely check out our preview video that we made yesterday. It's available on our YouTube page and on our Alibaba homepage right here. Essentially what's going on here is we've got two key drivers of overall earnings. We focus on the China retail segment, and we make estimates for annual active buyers and mobile monthly active users. And then we divide the revenue for each of those segments by the total number of users, and we get a revenue per user estimate. So we have mobile monthly active user estimate here, and the revenue per annual active buyer here. And we do that on a quarterly basis, and then we use that to forecast forward. So what happened for the December quarter, prior to today's release, we were modeling annual active buyers at, 450 million, and it came in at 443, so a little bit below our estimate. So I decreased the estimate for annual active buyers in the next 4 quarters to reflect the fact that it's a smaller base at this point. And then for mobile monthly active users, I was modeling 465 for the December quarter. It came in at 493, so well ahead of my estimate. So I increased the estimate for the next 4 quarters. And then in terms of mobile quarterly revenue per active user, that came in at 65.82 for the December quarter, and I was modeling 65, so that was pretty much in line with what my estimate was, so I didn't change that for the next couple of quarters. And annual active or revenue per annual active buyer was also about in line, so I was modeling just over 19 RMB for the December quarter, and it came in just below 19. So I didn't feel there was really any need to make any changes to the estimates in the future periods. And then besides China retail segment, all the other segments were pretty much in line with our quarter-over-quarter revenue growth rates. For cloud computing, we estimate revenue per customer, since they disclose customer counts now. And we were modeling customer count at 675,000 ahead of the December release, and it was well ahead of that at 765. So I increased our customer account in the next couple of quarters. Revenue per customer was about in line, so I was modeling at 235 per customer. It came in at 231 RMB. So I didn't change my estimates for that metric. But overall, cloud computing is not a huge contributor of earnings yet, so that didn't really have much impact on overall earnings. In terms of operating expenses, I was modeling a bit higher than where we ended up. If you look at total operating margin, it was actually relatively strong compared to my estimate. I still didn't make any changes to the operating expense line items in the future periods. If you'd like to download this model, you can put in your own assumptions, and we'll see where the consensus estimates come out on those estimates there. And then also in regards to non-GAAP adjustments, the stock-based compensation as a percentage of revenue came in at about 7%. Prior to today's release, I was modeling 12%, so it was well below what I had in my model. Again, I haven't adjusted this for the future periods. If you'd like to, you can bring this down. But for the time being, I'm just going to leave it. We'll see if they give any color on the conference call. It's about to start soon too. And that is pretty much it. And if you get down to the bottom, you can see our net cash per share increased from 507 to 650. So that adds about $1.50 of valuation benefit, since we value shares on a next 12-month consensus EPS estimate, excluding the value of cash. So we value cash separately. And then I've left the metric the same. So the price earnings ratio is constant with what the estimate was prior to today's release. And that brings the implied share value up to 106 from my previous $96 target. So definitely download this model if you'd like to plug in your own assumptions in the blue cells, and you can resubmit the model to us. I'll review it and post it on the website. Thanks for watching, and good luck with the rest of earnings season.